Hey everybody, this is the professor with Day Trading for Success. So every morning you can see myself and a group of traders trade live for absolutely free. We're trading on Thinkorswim, and you just put on alerts, subscribe to this channel, put on alerts, and you can trade along with us if you want. Now this month what we're doing is we're doing a strategy. We're teaching scalping, which you may or may not want to call it a strategy, but it's a way of trading, a style of trading with scalping. And then we're really using the Day Trading Volume 1's original strategy from way back, which is called the RV strategy, where you set historical data, support and resistance levels, and then you go on from there and you look for the price action and indicators. So I'm going to break in a little bit more about what that is exactly.
Welcome to Day Trading for Success, where the professor, a former math teacher turned full-time trader and coder, guides beginners on how to trade for a living using proven strategies, breakthrough indicators, and lessons from essential trading books. The professor isn't a licensed financial advisor. Always consult a pro before diving into any strategies or demos you see here. Start smart, practice in a simulator, stick to a solid day trading plan, and don't forget to log every trade. Your profits will start with preparation. Thank you for allowing us to share in your journey. Please remember to subscribe, comment, give a thumbs up, and click that notification bell so you can be the first to receive more of our great content.
So basically, this layout that's confusing you is it's a dynamic tool that pretty much guarantees me a profit every time I trade, if there's such a thing as guaranteeing. And the secret of being the 5% that makes money day trading is trading with the crowd. Wherever they're going to go, you need to know. You need to predict it ahead of time. You need to have a good probability of knowing which way the price action is going to go. And you do that in a few simple ways. So let me talk to you about how that's done basically. This chart over here in the middle of this confusing mess, if you're new, is a 5-minute chart. You can go right on here and expand it. And there's my 5-minute chart right there. Right? Now what you're looking for is you're looking for patterns in here that may repeat. But guess what? It's real easy. You don't have to figure much out because you go with historical data. And some of that, the oldest historical data, known as nature's mathematical formula, is the Fibonacci level. So you just find the low down here. So that's at 34 cents. I'm looking over to the right. I've got it clicked pretty close. I click once, I drag it over, and we go to the 44 cents, which is right there, that high. And then these levels, it's very sensitive. So I'm going to get me close, and then I'm going to go in here and I'm going to type in what we need. So we need that top to be at 44, and that's 58. So this is going to be at 44 because that's what the price range was down there. And this is at 34, not 33. And then what that does is it opens this amazing mathematical formula that's called Fibonacci retracements, and they create channels, and they basically identify the patterns, the way that the stock's you can count on they basically move. So this is a strategy is based around this Fibonacci level. It doesn't matter whether you're going high to low or low to high. You always go left to right. And then the way we trade in the morning particularly is we open it. That was a 10-day back 5-minute. This is a 2-day back 5-minute chart. Now we're going to zoom in for a little closer action, looking for the high-low. So here it is down here. It's in a different spot. And it's going to give us a little bit different levels and tighten up how we can expect to trade this. I'm looking over on the right, trying to get the right price. There it is. I drag it up here. Now I look for the 44 again. That's 47. There's the 44. I'm going to make that a different color. All right. And then we're going to go into here. Now, if you want to see some of the live trading, just go under the channel, which I happen to have kind of zoomed in right here. And there's over 400 videos, right? So you can see me make 33 minutes, make $13,000. You can see freestyle trading, $300 with 50 shares in just 6 minutes. How much money you can make over a month's goal. We do a lot of challenges here. So right now we're trying to just make $150 a day. There's a lot of videos over there, but if you go to live, right, you're going to find all the live videos. Lately, I've decided to just stop doing the thumbnails, and you can rewatch those there if you want. And I do recaps with them as well. So if you want to see that, but that's basically if you want to just see what the channel's about. So now I've done 2 different Fibonacci levels here. And now we've tightened up the channels. So you're basically looking for these to repeat. And the other way you mark it for this strategy is you do historical data. Well, the Fibonacci levels are historical data. Let me just get back to see where they end. So here's our price action today, right? You can see how well these levels were respected, kind of stayed right in between them. But we want to tighten it up, right? We want to even have a better opportunity to figure out where is that going to turn around. So you look at the previous sessions over here. Now, we don't know what's going to happen here. You go back a little further if you can, and you look for an abrupt stop and turn around of the price action. See how these candlesticks are marking the price action over here, and they're going to change with every 1 minute. Well, this is on a 5-minute chart. So every 5 minutes this changed, but see how many times it stopped right there? Now I follow it around, and you do what you call smoothing. You try to line it up to as many as you can, so you can see that's a really good level right there to create additional historical data. So just with that one level, let's see what they did. I have no idea, by the way. But, it let us know that after it broke that, it's probably going to turn around. So it tightened us up a little bit. You can see this day, it was right there. Of course, that's where I marked it. Never mind. So now we'd want to do other additional levels here. On the upswing, there's a whole bunch of markings there. And then you can see a bunch here. Let's see if we can line up multiple days together again. It turned around right here. See how many times it turned around right there? And then it picked it up right here and right here. And then you can do an abrupt turnaround there. And you could do them on the wicks, or you could do them on the bodies. You try to catch as much as you can across, because it's more likely it will repeat at those levels. So what is a pattern? A pattern is something that repeats. That's all it is, something that repeats. Now, you can learn the candlestick patterns, like in Day Trading Volume 2, the Candlestick Pattern Playbook, and you can learn what those actual patterns mean within themselves. But there's another way. You just want to see a pattern of when the price action stops at a spot and goes the other way. And how many times will it do it? Over and over. You might get lucky and you just are able to call it like clockwork every time it's going to turn around. So, these didn't create perfect channels, but they're not bad. You can see, it hit it a whole bunch of times there. So there's a channel between this fibs right in the middle, kind of made a wide channel here, lots of places. This got picked up here and turned around. They're not going to be exact, but they're going to give you an idea of like you're getting to the end of the price action. But you need more, right? You need more than just historical data. That's just the first step of how to trade this strategy. So let's go into a little bit deeper. So before I go back to the layout, I just wanted to make sure I said we want to go a bit deeper. This channel's been around a while with professional traders that make thousands and thousands of dollars doing different things. And I myself am a coder. So I code custom scripts for Thinkorswim and ThinkScript. And you can get, most of those are available. I have links to them to help you trade along. But we've also got this into different seasons. So you might want to sit down and really see how to set up a chart properly, how to use an indicator properly, how to build a layout. With lots of free layouts that you can download, and just so much information that you might want to look around a little bit, as we get into this, so you can really see. So now this is the layout that I use today, and I'll go over it with you. You don't have to have something this complicated, and if you're new, it's very complicated. But it doesn't hurt to understand. The more you understand, then the better chance you have of making money, basically. So this month's challenge is very basic. This is all we're trying to do right now, is just do like $150 a day, so that we can add up to like $3,000 maybe at the end of the month, which can help pay people's bills, and try to do that in a half hour to an hour every single morning. Monday was a holiday, but here we are. And so far we're right on track. We're a little bit ahead of track, and it doesn't come without its drama, but it's exciting. I have a bunch of screens so I can drag this stuff around. But this is a 1-minute chart filled with all kinds of data that I'll talk to you about briefly. Then you have the news down here. You have a daily chart down here that has all kinds of custom things as well on it. We'll go over those briefly. This is the active trader. This is a level 2. I hide the exchanges off of here because it'll show my account when I'm trading, my account number. This is a 15-minute chart, a 5-minute chart, the time and sales, another 5-minute chart. This is the 2-day one, and this is the 10-day one I just showed you on the fibs. This is a 30-minute chart reduced, a 1-hour and a 4-hour chart, all reduced. I have those all on one layout specifically because when I stream live, I'm jumping around showing people things, and I want to make sure that I've got it at my fingertips. A lot of people will spread it around to different screens. I've learned to put it on one so I can set up the strategy, talk about, as far as the historical data, talk about the style, talk about any strategy, talk about the stocks. So that's why it's set up this way, and I'll explain about this in just a second, but I want to go on about how we find our stocks first. So this is a scanner, and I am a coder, and I actually code these scanners in too to find specific stocks. So what might I be looking for that Thinkorswim Charles Schwab wouldn't have readily available for me? Well, if you're scalping, you need to make sure, and we'll go back to the charts for a second, you need to make sure that this price action on the level 2, typically you'll see a level 1, which is just, there's the ask, there's the bid. Level 2 shows you who's waiting down the pike. And you want to see that moving in a certain way, swaling I call it. You want to see it moving 10 to 15 cents either direction every 10 to 15 seconds, 30 seconds, so that you can have 10 to 15 pennies to trade. With 100 shares, that's $10 to $15. 200 shares, that's $20 to $30. And in just a few seconds, you get that. If you have the right indicators, it even tells you your target. So you need to find a stock that's going to move that way. Now, some of them are no-brainers, but it gets a little deeper where you need to find them. So I have coded this up where a couple of things. If this doesn't move at least 50,000 in volume and liquidity per 1-minute candle, it won't come up here, right? So that's the one thing. It also shows the spread, and then it also has it that it has to move at least 15 cents in a 1-minute candle, and often you'll have it repeated. So with all those codes in here, and by the way, they're over at the $1 Million Margin Club. I make them available. I don't sell anything. They have them over there. I get paid to code, and then you guys can get them there. Only like $4 to get these custom scripts if you want them. You don't need to have them, the custom coded scanners. You don't have to have them. You're going to find a lot of these, but it makes it a lot quicker first thing in the morning. And of course, I have so many different ones that I do, like the Gap and Go. If you're looking for momentum ones, you don't have to pay a service. I code them for people. I make them available for like $4.99. They make them available for $4.99. I'm just saying they're not like the $200 scanners you might see or the monthly fee. There's no reason to get caught up in doing that. These are going to have everything that they try to charge you for like $4. So keep that in mind. But let's go back so there'll be a lot of them. If you watch, you'll see a lot of videos about scanners. But let's talk about this. Let's open the day one for a minute so you can see, right? So I've got the social sentiment here. I've got the ATR here, which is so important. And then this one's free over at the $1 Million Margin Club. You might want to grab that. I put this on my day chart because it's immediately telling me that this stock is worthy to trade, which of course with a Tesla is no problem at all. And then I always have my ATR down here so you can see, and then there's a custom script that gives you the half value of the ATR and then the full value. What is an ATR? Average true range. It's an acronym, ATR, average true range of a stock over a 14-day period based on Wilder's mathematical formula, smoothed out, so you can pretty much predict the range, high and low, of a stock. Now, it's going to give you the overall range down here. Like if I go over a candlestick, let's just say I hit this green candlestick, and you look down here next to this, it's going to tell you how much money that's going to move in a day, $18.30. Now, it probably isn't going to move $18.30 in one direction, right? So a strategy was developed way back when they did Day Trading Volume 1 with the $1 Million Margin Club, which is a group of professional traders. Link connected, along with a lot of other great books that I may or may not mention. That strategy put half the ATR level on your chart, meaning it'll probably go half one direction and half the other direction, not all in one direction unless it's trending. And basically, there's a couple ways to, well, there's a lot of ways to trade, but the two main ways to trade are people are like, don't fight the trend, go with the trend. So going up or going down, you're looking for a stock, figure out which bias you have and move that direction. But another way you can trade, which will always have a stock, is when they're consolidating back and forth like a slow moving snake, right? And they're going to back and forth in between their ATR. If it breaks the ATR, it is now trending, and you might want to ride that trend up or down. The problem is you never know when it's going to exactly stop. If you've created historical data with the Fibonacci levels and with the price action levels that I just drew for you a second ago, you can really predict very, very well where they're going to turn around. Never exactly, and so you need more and more help. You need crossovers. This is an average true range over 100 candles back. That's 200 candles back. That's 50 candles back. You can see the inertia as they cross over each other, but indicators were made to signal you and even give you alerts when that's happening. So you don't even need to learn how to read it anymore. Things have come a long way, and I'll show you a little bit about that right now. Let me close this day chart. Now this has the ATR levels on this big jumbled up chart, but it doesn't have the labels at the top up here, but it does have the ATR. So let's take a look if we can find them. So they'll be green, a green line. So that is your ATR overall high right there. This is your ATR. No, wait, I'm sorry. That's the market magnet. Here's your ATR overall high up there. I know a lot of lines. All these little gray lines are marked every whole and half dollars. Trading with the crowd is so important. A lot of people go in whole and half dollars, so knowing where those are is very helpful, but you may not want them. So you know what? You can just get rid of them and apply, and now they're gone. And it's much less messy now. Let me zoom in. Oh, we're way back here. So I'll zoom in here. When you trade on a 1 minute chart, of course, you're not going to see all these lines, right? Because you're going to trade like that. So you're going to see that historical data. Look how well it's respected here. You're going to see those Fibonacci levels. Look how well they're respected here. You know, here too, turned it around, you know. So I was trading this just a little while ago using, and this is the VWAP, right? The volume weighted price average right there, which is technically the value of the stock at any given moment if you were to try to buy a larger share size. And then it's got a bunch of other indicators in here, but the average true range is up here. There it is. That is like a wall when you go hit it. That's half of it, and that's half of it down, and then the whole amount is there, and then the whole amount is down here. Right? These other dotted lines are something different up here. You'll learn what they are if you get those indicators. There's your 200 moving average there. It's just going to be a straight line on a 1 minute chart. On the day chart, you know, it moves, but on a 1 minute chart, keep in mind, this is in the middle of one of those days, so you just see it static looking. But so having those average true range here is going to really help traders. The other thing you have is the engine here, really, that tells you when the trade's going to go a direction. This is an advanced indicator that scalpers use. It shows inside the candle the power. I always annotate it to you're on top of a wave and you're waiting to jump on that wave as it comes, you know, as you see it, as you see the inertia coming, you jump on. See how it's the inertia was just telling you it was going down, and it went down when it saw it there. So inside of this, you can see it going up or going down, and it gives you the confidence, even the percentage, when to trade. This is called the Scalp Meter Pro. I have a link to get it if you want. If you're not going to get anything else, I would get that if you're new here. This one here was developed pretty recently, mostly for beginner traders, telling you, giving you the overall average of the last 9 candles, up or down. red meaning down, green meaning up, and then it smooths out a target range. So if you were to get in a trade on a 1 minute candle and you're trading on a 1 minute chart, you don't want to hold that trade for more than 9 or 10 cents going up or 11 or 12 cents going down, meaning 100 shares, $9 or $10, 11 or $12 going down, or 200 shares, 500 shares. You trade with more shares, you make more money on that short target. It'll let your pennies be marked right here, and then your overall P&L right here, made for fast trading. This is going very slow right now. You can see the meter called this to go up. You could have jumped on that. You might want to see how it keeps rejecting on that historical data I drew from way back when. So you start to pick up on this stuff, and it becomes like taking candy from a baby. What a weird phrase, right? Anyway, it becomes really easy to figure things out when you have all these things to help you. If that weren't enough, you have the arrows telling you which way you're going to go. This is from the MACD, a different kind of, you can get a histogram on your chart, or you can just get the indicator that says, go that way. And then the other one that says, oh, you're done, go that way. And it's just, I laugh because it's just so simple now compared to how what we used to have to go through. Now, none of these are going to be 100% accurate, but they're pretty close. So you're trying to cumulatively get as many that say the same direction, 80 to 90% of them, which they usually will agree, not always. And then you make your move. And like I said on that surfboard, you're jumping on, and then you get off before it hits the rocks. Once you learn to trade in a 1 minute, once you trade in a simulator or just trade with one share, it's like, oh gosh, I lost $5 after I traded all day because I only traded one share. You get rid of that nervousness and you start to see that this isn't really very fast. This is pretty slow to decide when to push a button to get in or get out, right? And you see your number, your number will come up right here or right here, and you can see the price action. Like if I was going to let's just make an example here. Like let's just say I took one, that's 10 shares. Let's just say I did one share. Like say I'm you guys, I do one share. This says it's going down, but you have a support right there. So I could buy in off that support. Now that's 53. So I'm going to go ahead and go in. So I got that, and it dropped right when I got it, but it went down 10 cents. But it was saying that it was going down, but I bought it off the support level. So, I'm not wicked nervous. I'm like, oh my God, it went down. It went down so fast. And that's really bad if you had 100 shares, right? I mean, that really went down. That Fibonacci didn't hold it. Instead, the Meter Pro told you, and the volume increased when it changes color. That's telling you that there's more volume this candle than last candle. Strong move down. MACD, that arrow says, hey, we're going down. Why did you just go long on that, right? So I'm 13 cents down. You can see here, it marks it up here too, right? I could shrink this down so that whole thing is all the way across so I can read the whole thing. You can move this around. This is what they call on a custom grid. And I have the news down here saying, I might read like, why the heck did that just happen? There might be a news story but as you can see, you just wait a minute. What goes down must come up. What comes up must go down. You know why? We're trading a large cap, mega cap stock in Tesla that always retraces, they call it. It goes back to, not always, I should be careful with that word, but pretty often will give you the opportunity to make money no matter which way you go. But you have a max loss set, like, hey, look, I don't want to lose more than 10 cents here, on a one share, right? So if it gets that high, I'm just going to get out, right? In this case, I'm making money. So I get out. I think I made 4 cents, but I'd already made more money on that. I should have paid close attention. But, if that was, I think it was 4 cents. If that was 100 shares, it would have been $4, or 1,000 shares, it would have been $40. And I do trade that high, and I do trade on margin where I trade with the bank's money, and you can get approved for all that. So you should learn about that, and you can get offshore. Again, if you get that original book, I found it to be the best book, Day Trading Volume 1, put out many years ago. It talks to you about offshore accounts. It gives you sample, when you're opening a new account, it gives you sample applications. It literally walks you through, starting from a beginner, every step you do with no nonsense, not like 500 pages, like in 15 pages. Like every page has something that really means something. So and then it goes into the strategy that was developed by professionals that so many people trade, thousands upon thousands of people, many millionaires. So look for that book. I have a link to it. The other book would be Mark Douglas, Trading in the Zone. He's a different author. Really helps you deal with the probability and outcome, lets you, and gets into your psychological makeup to deal with the risk. Another one is Best Loser Wins. That's by Tom Hogarth. That'll talk to you about never follow the crowd because 95% of the crowd is wrong. Now, he's more of a swing trader, day trader too, but that's a swing trader philosophy, really. When you're scalping, you do want to follow the crowd because the moves are very short and everybody jumps on and literally, like, picture that if you're on a boat and everybody lean to one side, right? You lean, everybody's going the same way. You can see it. You can see they're all over there, that's where you want to be. Not really, you'll capsize, but maybe that's a bad analogy. But I mean, you can see it happening, right? In very short term before the boat's righted, then it might be righted, but I'll have to work on that analogy. But trading with the crowd is so important, and the indicators are going to call it out because inside here, these are like moving averages. That's 20 candles back, that green line. This is 9 candles back, this gray line, right? And then I took off, I used to have a 14 on here too. And then those solid lines are done based on the day trading, a day average. So you might not see those here because it's rare they come across your 1 minute. There's one, a 200. There's a 50. This blue line's a 50 moving average. So those are really important to see where they are because you see where the crowd's averaging out, and they're always going to be kind of in this snaky movement. So as you start to understand which way the arrows say and which way the meter says to go, it really becomes very easy to predict the direction for a short period of time. And everybody can be wrong. It's never going to be 100%. I'm not trying to say that, and I'm wrong all the time. I'm just letting you know that it's really as simple as the probability and outcome. And you'll watch so many videos that are cherry picking. When the price gets here, go in here. This always works. I've got a pattern. When 4 candles go this way and 3 candles go this way, then you go up 2 candles. Okay. Well, that's just not going to work, guys. That's people finding stuff on a chart. Whenever you see a video like that, and I'm not bad-mouthing everybody. Everybody's got a right to make their nut, right? But whenever you see one of those videos, all you have to do is go back on a chart and see how many times that actually repeats. And you will find, if you can even find the pattern, you will find that it rarely ever repeats. Rarely ever repeats that pattern. So they're selling your course. Just look a little deeper. What are they selling? You just click here and you too can trade like me with this amazing pattern. So sorry, I just had to say it. You need to make a decision in the moment. You need to be your advocate. Read those books, watch those videos. It certainly doesn't hurt. I would just say, be careful buying a course. I don't sell courses, right? I'm just telling you like it is, right? But I have certainly bought those courses. I bought a whole bunch, even when I was already making a living as a trader. I just kept buying them because I was very interested in what these people were saying. And then I found out that it's all cherry picking stuff. But, it doesn't mean that it won't work sometimes. It's just the impression. You know how we are. We're so impressionable that we decide without them even saying it. Here's what they're saying. Oh my God, and we just take that journey. They actually haven't lied to you. They're just, it's like a carny. They're letting you decide. You're having a good time, but you could lose the house. So be careful. But anyway, I am an indicator driven trader. I am not a licensed financial advisor. You should seek the advice of a licensed financial advisor before you trade. And they'll probably all of them will say, don't day trade. That's what they'll say. But when you start, trade in a simulator first, and then start when you go with real money, go very, very small share size, guys. Okay. So anyway, Now let's go into some of the other indicators here. So this down here is called the market pulse. I love to have this up because this is telling me what the overall market is doing. And right now, it's not looking good. Everything's red. The Q, the SPY, the bonds. But look, it's right on the close to flipping. This is on a 15-minute chart. So that just told you how close those were to flipping. This is a 5-minute chart. It's giving you shorter data of the same thing, but right now they're lined up. This up here on this 5-minute is multi-chart alignment. So this is telling you on this Tesla stock, the 5-minute chart's going up, it's green, 15's going up, 30 minutes going up, 1 hour's going down, and 4 hours going up. That's because it's going to pick up different ones because it's very wishy-washy, up and down. What goes up must come down. What goes down must go up. Lining up the charts, because that's when people only trade sometimes in those time increments. This is the simplest thing that people will not tell you on these videos. Just the simplest thing. And I always wonder, is it because they just don't know? Or do they just want to sell something they're doing? I just don't know. Some people do, but mostly you're looking for alignment with everything. It comes down to that simple alignment. The more you get aligned, retrading in the zone, man, it's not just my word. The more that you get aligned, the better probability you're going to have a winning trade. You go the direction of the alignment and get ready to get out because you can always still be wrong. I have these levels over here marked on vertical lines. Every one of these is a 5-minute marking here, right? So I know when it comes up here, like when it came up to that 15-minute, I know that the 5-minute people, the 10-minute people, the 15-minute people were all making a decision based on that. So what did that break? That broke up. So everybody trading those candlesticks says, we're going to go up. And they jumped in and they drove the stock up. Doesn't happen every time. Probability is, though, it will happen. Then you just align that with the meters. Like, hey, meter says it's going up. Target's higher up than down. Those three on this one. Hey, look, MACD said it's going up. It's like everything's aligned. Here it's getting weak. This has a crossover attached to it that says, hey, it's getting weak. And sure enough, you're hitting a resistance line up here. This just told you it's getting weak. This is starting to split its average. It's telling you you've hit the range. Be careful continuing. Doesn't mean it won't keep going up. It's just saying be careful. What I would do here is I'm just going to play a little bit more of a move here for you. So I would take that and I would sell that position, right? I would sell on that. So now I'm going short, right? So there's my position at 81. Now I already could have got out for a couple bucks if I wanted to, but because things were turning around there and we hit historical data, I took a bet that I was okay and I wanted to put a little bit more on the line to show you guys. And now I'm just going to, well, it zipped down right when I went, but I made 50 cents. But I just wanted to show you, like, if that was 500 shares, I would have been up to 125 or something. And if I had just waited a second longer, I would have had more money there. So now and that's what they call a rickshaw man, a pattern. Read your pattern books, guys, for the interior patterns, not just the historical marking the ranges. I mean, this is going to tell you things like reversal sign. So we hit that, and it gave you a rickshaw, which means, again, there's a reversal sign. This is likely to go down, but it might take a beat. It might take a beat, and it might not. It might. You might be a winner, right? So anyway, this market pulse is really handy. This multi-chart alignment is now everything's aligning to go up. So you might second guess taking a short there. You're always reassessing. You're always looking. You're looking at this level 2. You're looking, unfortunately, this stock is, the level 2 is broken today. Let's go to AMD for a second. You'll see that I have like little trades on many stocks that I picked up on the scanners. Now, when I switch, everything gets all jumbled up again. But if you look at this one, I'll talk to you about level 2 for a minute here. Let me zoom in. Now, you don't have to be this good at moving these things around. As you can see, I traded AMD very recently. I trade with a lot of the staff here in the studio. I'm in a studio, and I was trading with Charlie, and we were trying to make sure she was at 150, and this is when we made it. We just needed like $4, and we made a couple trades right here. And I did intraday historical data. Like I marked where they were making what we call a flat top, seeing if they were going to have a breakout or a breakdown. And right there, I called a couple right, and she made her money. And I do what they call quarterbacking. I call the trades. So trading is really boring, and you're sitting around. But let's look at the level 2 here just briefly, guys. So this is what they call the spread between this. So this is what somebody's willing to pay, and this is what they want. So the closer that is, the less that the market maker will take from you when you make the trade. It's totally free to trade on Charles Schwab. So you can see right here, like if you were bidding, you would go across this bridge. Picture it, and there's a toll booth here before it comes down and meets to their ask price, and then they take some of that money, usually a fraction of a cent. But if there's a big spread, they can take 5, 10, 15, even a couple of bucks, depending. Some of your spreads can be $30, so you want to try to make it really tight on your spreads here, so you can they don't get much money from you, because they do not charge trading fees on Charles Schwab. There are no trading fees. Now, everybody pays a small amount to the exchanges, but the market maker here, they take it off the top before you ever see it. And this is what the price is that they're going to give you. And it's usually in between. But when you press market, they're going to kind of make it go the direction they need it to go to make that full penny. It's not like the guy selling it got their money. They took it, and then they got just what they were, they got the in-between. Like these two guys get the in-between or the worst, and then they make that money. So the tighter spread means you're going to, if that makes sense to you. But I wanted to talk to you about, these are the people waiting. So once those get filled, the next one comes up the line, waiting to go up to get their chance at the auction, their chance at the bid, right? So that's always moving. So when I'm working those scanners, I want this to move 10 or 15 cents up or down in 10 or 15 seconds. When it just sits here like this, we can just sit there and watch a stock for an hour. It's like watching molasses dry, and you'll make, $5. So you really need this to move up and down. And what happens is, these are the number of shares that are waiting multiplied by 100. This is a lot of information. You might want to rewind. I have tons of video with more detail about each specific thing here. But if you picture the ask and the bid moving like this, picture them making a little noise, like little ticker wheels, right? Asking bid, ask bid, ask bid. They get filled, and then it moves. Every time they get filled, and it moves. Well, when you see them stop, but you see the volume going up here, this is registering the strength of the volume. This is showing you how many, what is the liquidity, the volume inside. This is the overall day, 29 million. This isn't just a 1-minute candle. And this is how many buyers or sellers are inside the middle. A fantastic indicator here. You can see I've got it so tight here that the meter is off, because I'm trying to show you this level too. But if you go over here, now the meter's on here, so it's easy to read. But now as this is coming up, if this stops dead, but you see this shoot up, but the candlestick's just sitting here, because this is only going to move if the price moves. This will move with the price. So you can get a pattern of the price by looking at the candlesticks. All the way back in the 16th century, the Japanese rice farmers were doing this with an abacus. They were reading mathematical formulas. This has been around forever, right? So the price action will design this pattern, and then you can try to see if it's only called a pattern because it repeats, right? That's a pattern. So you're looking for it to repeat. At some point, it's going to repeat. Your job is to find out when that is by using as much data as you can. And I got off topic slightly. But when this is moving, just staying here, but the volume's going up, that means that as soon as these buyers or sellers are bought up, as soon as these orders are filled, and there's like, usually you'll see a big number here when it stops on one side or the other. Remember, you're multiplying that by 100. See how it keeps stopping at the 12 at that price? You might see a 3-digit here multiplied by 100, and you see the candle going straight up, right? But it's not, I mean, you see the candles, I'm sorry, you see the volume going straight up here, the bar, but the candle isn't moving because the price isn't moving, right? What does that mean? That means they're being absorbed. All the shares are being absorbed, but they're not gone yet. So the price can't move because there's too many at that price. And then the second they get absorbed, bam, so you want to be right there waiting. You'll see the number go down. You'll see that 1,000 go down, 800, 700, 500, 400, 300. Oh, God, get ready, boom, and you're in, right? Or you're just waiting. There's a way on Thinkorswim. You can just set the price just above where you want it to go and just have it waiting in there. So there's a lot of videos on how to do this, and they have a great help button up here. And you should watch all their videos. They have a bunch, and I have tons and tons of videos about this. So the market's about to close. This is the post-market over here. So everything's going to die out. But I came over to AMD just to show you. So the stocks we traded today to get to our $155, and it wasn't without this drama, was Palantir was $30. Tesla was the big one, 113. And then I think AMD, we were just there, was 12. And I think that might have been it. Yeah, I think that's all we traded today and made any money on. Yeah, so that equaled that amount of money. But remember, I went to the scanner and I looked up various stocks to see what would work. And then I used these custom indicators and historical data. And there's another book called Day Trading Volume 2, which is, Day Trading Volume 4, which is has a bunch of breakout strategies. And they tell you when the price gets to a certain time increment level. Like this is a 30-minute chart. See here? So before the market opens, actually, what you do is you mark the open and the close of the last 30-minute chart. So if I just click here, and I click here, and then I drag this over, I don't have the chart open up, but say I drag that over, I would mark what they call a breakout. If it went below, you'd go short. If it goes above, you go long. See how well that worked? It went above, it went long. It told you. That's the 30-minute pre-market breakout. There's another breakout, and there's a book that shows you all those. I think it's this one. Is that going to open up for me? Yeah. This has them. Breakout 1 and 2. I don't know if 3 or 4 is on here. No. That's taking me to I have a desktop icons here, but this has a bunch of different ones. So that's in Day Trading Volume 4. And people wait around for those to break out, guys. I'm going a little bit into some analysis here to help you out if this is the only video you ever watch. So they'll also do a 5-minute breakout on the open session, the first open session breakout. So let's get into the 5-minute here. So here's your first 5-minute after the market opened. I remember marking this earlier because they ran into each other. So you can mark the high. Now I took to doing this rather than just a solid line and I'll tell you why. Because of all these pro traders came up with the most fantastic way to trade breakouts. They learned that you trade the breakout up, but if it comes back into the range, you never trade inside the high and low. But if it broke down low, then you'd go short. Then you wait for it to break high, you would have had a winning trade. All right? When it goes back in, don't mess with it. When it breaks out high, you have a winning trade. When it goes back in, don't mess with it. When it breaks out, you have a winning trade. It's like, they say it's like printing money, right? So that's your 5-minute, and you can see if you were trading on a 5-minute chart, you could have so easily called these trades. Another indicator down here is, this is the ADX, and this shows you the trends, and the cloud shows you the strengths of the trends. This is clearly trending up, and then it's going to show you the power of how strong it is. So these are all custom. This is a custom one. I also marked the close on this just in case it came down yesterday's close. But I mean, this is just some ideas, guys. If you can, there's more in-depth videos on this channel. I hope you do watch that. I do get a small income from the channels. I have links to affiliates that I believe in, only that I believe in, authors that I believe in, and then the $1 Million Margin Club has all the custom scripts. And since I'm a coder, I really believe in those only if they work. So what you're really trying to do is to basically see, learn these things, practice in a sim first, and then trade with like one share live until your hands stop shaking, and then you can build them up. I have a video out there called Trading with Nerves of Steel. You should watch that. So I'm not going to attach on the whole live stream for today, but if you want to, because this video would be so long, but if you want to see every trade, just go to the live trades. And you can see the live trades today. And we have a fairly large group that trades every morning. And I hope I see you there, guys, because I think that with a little bit of practice, you can make a living day trading. So the bell's about to go off. Let's listen to it. The market's going to close. A few seconds here. And there it goes. Market close. Does that feel like you're in the room? Like you got some cool trading? Anyway, guys, thanks for watching. I hope I see you in the mornings. I was starting to say this channel is dedicated to trying to help you make $100 a day, $200 a day, $500 a day, right? Make a living. You make a living, you let me know. We've got quite a few millionaires that have already let me know over the years. Many, many people making a living. That right there floats my boat. Wow, did you see that? That's an algorithmic trade. Did you see that spike? Look at that. Now, was anybody able to catch that? Probably not. The market's already closed, but it showed it in open session. So they do these share drops. And I have my layout set up very sensitively so they pick them up. We call that a shadow wick. And most people might not have even seen that on their chart. It depends. I have a video about how to speed up your layout, speed up your chart. I mean, all kinds of videos, guys. You should check them out. Okay, guys, thanks for watching, and go green out there. I'll see you soon.